In order to understand Bitcoin, you have to examine the ideas that define money and ask yourself, what is money? Where does value come from? And is there better money? Welcome to Bitcoin Brunch, Bitcoin news, education, and commentary. We pull it all together so you don't have to, curating the latest Bitcoin news and topics that you need to know about. Hi, I'm Alicia, a mom with an orange heart and the host of Bitcoin Brunch. This is episode number 3 for the week of September 14th, 2024. Thanks for listening to our new podcast. We're happy you could join us for our Bitcoin Brunch Break, where we aim to keep you in the Bitcoin loop. Okay then, let me grab my cup of coffee and we'll jump right into our snapshot. The past few weeks have been quite choppy. Down, 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 said the charts and the FUD puppets. While the charts reflect the current sentiment, there can be a lot of wiggle room in the data with the timing of sells and buys from big holders and institutions. The FUD puppets, as I call them, are visible on the mainstream feed, which strategically place newspaper articles or CNBC lunchtime guests who come on to poo-poo the value of Bitcoin. At times, it appears they are attacking it from all fronts. Given the speed of viral clips these days, and the general public parkouring from various data entry points, news bites, office break room chats, social feed, neighbor gossip, and day-to-day information touchpoints, it's easy to get sucked into a cyclone of fear and doubt. But have no fear, MicroStrategy is here. MicroStrategy just announced it bought over 1 billion more of Bitcoin this past week. So let's focus on the facts, not the FUD. FUD is in the air, but public companies and ETFs are still stacking. Millions of dollars flowed back into ETFs this week. Several ETFs had inflows, including ARKB, which just bought $100 million worth of Bitcoin. More public companies like Canon, an ASIC chip design company, are holding Bitcoin on their balance sheets. Bitcoin bumped back over 60,000 while mainstream media continued to downplay its resilience. Trusted depository institutions, banks that hold your paper money, are essentially taking from your hard-earned money over time, lending it out while required to keep a 0% reserve ratio. Bitcoin isn't a hedge, it's a revelation. Bitcoin is the only currency with absolute scarcity and verifiable by mathematics. The hash rate just reached another all-time high of 752 exahashes per second. And the higher the hash rate, the stronger the security of the blockchain network. Volatility is part of Bitcoin's makeup, but instead of focusing on the FUD and wincing at its ups and downs, look at it like a dance of energy. So get out your Bitcoin dancing shoes and shake them wiggles out. Okay, so on to recent Bitcoin happenings. I want to begin with discussing the unique traits that Bitcoin holds. You may already know a lot about Bitcoin, or maybe you are just beginning to understand it. Either way, it's important to think about Bitcoin's key features and understand its special nuances. Bitcoin is different. Bitcoin is a cryptocurrency, but its unique combination of features distinguish it from any other money in human history. Bitcoin is a digital currency recorded on a blockchain ledger available to any person at any time, anywhere in the world. Bitcoin enables you to transfer money person to person on a decentralized network securely without involving a bank or institution. Bitcoin is scarce. There will only ever be 21 million Bitcoin, as its finite number is a property of Bitcoin's protocol design. Bitcoin is a fixed money supply, and its scarcity is its most important feature and integral to its value. Bitcoin's consensus protocol affirms the number cannot be manipulated and ensures its scarcity and integrity. Bitcoin is decentralized. Bitcoin is not owned by any one person or controlled by any central power, but is verifiable by everyone. It is a computer protocol which is decentralized across 1 million individual miners spread across the globe and can be verified by anyone with a computer. No government or central authority can increase its supply, change its protocol, or dilute its shares. Bitcoin is available. Bitcoin is available 24/7, 365 days of the year. Bitcoin is not limited by banking hours, which are closed about 75% of the hours in a year. Bitcoin can confirm transactions 365 days per year at any hour of the day. A few weeks ago in early August, Japan unexpectedly raised their interest rates on a Sunday when traditional banks and monetary systems were closed. Traders around the world were able to buy and sell Bitcoin and offset their losses. Because Bitcoin is always available, anyone can buy and sell their Bitcoin any time of the day or night. Bitcoin is portable and accessible. Bitcoin is international and does not care about borders. Bitcoin can cross any border any number of times with little or no fees. This unique feature enables people in developing nations to receive payments from family quickly, without high fees. It allows refugees to store value and safely move anywhere in the world with their savings intact. Bitcoin is inflation resistant. Bitcoin is infinitely divisible, but cannot be multiplied or printed. Bitcoin enables you to store the value of your hard work without inflation. Bitcoin is inflation resistant, unlike other fiat currency. Bitcoin has historically outperformed inflation and is resistant to inflation, unlike cash and money markets. A quote here by Lynn Alden: "On average, if you're a wage earner, you're basically on a treadmill because every year you have to get a raise to keep up with inflation." Until the Fed stops printing new paper money, there is no way to reduce inflation. Essentially, you have to work more in order to live at the same lifestyle. When a central bank increases the amount of currency supply, it leads to inflation and the value of the dollar is decreased. You have the same amount of money in your paycheck, but you can't buy as many groceries as before. The higher the inflation, the higher the burden it puts on the wage earner, who inevitably has to earn more just to keep their buying power at the same level. Bitcoin's inherent inflation resistance makes it the best performing monetary asset for the individual and also a superior treasury asset for businesses. And of all the features we've talked about, most importantly, Bitcoin is censorship resistant. Today we see examples of centralized bodies and governments across the globe taking away people's right to free speech. Misinformation, disinformation, hate speech, words are violence. These are maxims meant to dampen the fact that they are censoring you, they are muzzling you. Under the guise of safety, some in power want to be able to control what you say. Safety and freedom are antonyms, opposites. Once one begins making rules under the pretense of safety, with each small rule they take away freedom. They nullify who we are. If we, as humans, cannot speak freely and are prevented from signaling our thoughts and ideas, then you are essentially terminating who we are at our basic essence. As an individual human born on Earth, our language is inherent in our being. We are symbolic beings. Our thoughts, our ideas, our words are coded at the most base layer of who we are and how we exist. Language is hardwired within our fabric. To silence someone, whether you disagree or not, or don't like what they say, is like taking a machete to who we are as humans. So, of all the features of Bitcoin, the most distinct and significant is that Bitcoin ensures free speech. Satoshi's magnificent design and its encoded protocol prevents institutions, governments, or corporate power from silencing you. Governments and centralized parties cannot surveil your transactions or freeze your money if they disagree with you. Bitcoin's decentralized system disseminates control through a peer-to-peer network of independent nodes across the world. And thus, as Jack Mallers affirms, Bitcoin is the best money in human history. More than a monetary protocol, Bitcoin is a power protocol. People are starting to look more at Bitcoin and its effect on power. For a while now, we have heard from the critics who have concerns of the energy consumption needed to run Bitcoin's network. Most recently, there have been several posted reports demonstrating that Bitcoin mining can help with renewable energy and may actually be beneficial. It's interesting and definitely needs to be examined further. As with both Bitcoin and the rise of AI, it is clear energy usage needs to be purposeful. Power companies are looking at Bitcoin mining to expand their performance. Agile Energy X, a subsidiary of Japan's fourth largest power company, TEPCO, is experimenting with offsetting output power oversupply issues. By incorporating Bitcoin mining, they can prevent the waste of energy. Energy producers have to control their output via various methods, including using up energy when they produce a surplus. Agile Energy X conducted simulations which if implemented would convert the surplus of wasted energy into Bitcoin mining, which could produce profits in the billions of dollars per year, stabilizing the company and expanding revenue. Bitcoin not only converts your energy into a store of value, or money, but Bitcoin can stabilize the world's power by reallocating its usage. The productive use of excess energy not only incentivizes companies to make better use of their surplus energy, but also appeals to renewable energy supporters, as this energy efficiency would likely lead to more green energy to be introduced. The additional miners and nodes coming online not only rebalances the world's wasted energy, but further secures and reinforces the stability of Bitcoin. Bitcoin is no longer only a digital monetary protocol, but can be now reconsidered as a digital power protocol. Peter, Jack, and the Bag of Gold. Podcast host David of the David Lynn Report invited guests Jack Mahler, CEO of Strike, and Peter Schiff, Chief Market Strategist of Euro-Pacific Asset Management, where they debate the digital asset Bitcoin versus the physical asset, gold. I saw Jack speak at the Bitcoin Conference 2022 in Miami Beach. He made a mark then and continues to be one of the best defenders and champions for Bitcoin. I feel like he's finding his voice and was happy to see him take on the bombastic Peter Schiff. A long time ago, when I asked my mother-in-law how she chose which companies to invest in, she told me she always looked at the CEO of the company, and many times that would help support her decisions one way or the other. Now that I'm a bit wiser and with over 20 years of investment decisions behind me, I can clearly see the CEO as a trustworthy indicator of a company's long-term success. When I look back over the years, the best companies led with a visionary CEO like Apple CEO Steve Jobs and Starbucks CEO Howard Schultz. Jack possesses similar qualities as a young leader in the Bitcoin space, with a clear vision and strong convictions, and success will likely follow him long-term. Jack and Peter discussed their views on gold and Bitcoin. It was refreshing to see Jack push a bit on Peter, who is a practiced wrangler and knows how to throw out clip-ready headlines. Jack held his own and championed Bitcoin, giving it the attention it deserves. For even those who love their gold must admit that between Bitcoin and gold, only time will determine the true champion. Peter makes a case for gold. Peter believes gold is more stable and has more value. He claims Bitcoin has no value and it only has price. Peter says, despite all the hype, all the ETFs, MicroStrategy, El Salvador, Super Bowl ads, and a massive conference, they still can't get Bitcoin to make a new high. In Peter's opinion, the hype over the last few years should have driven the price up higher. Peter proposes using gold as a basis for a digital monetary system. Peter believes every feature of Bitcoin you could replicate with gold and actually have a real solution to the problem Bitcoin is trying to solve. Peter concedes one interesting aspect of Bitcoin is that you don't need a custodian to transact in Bitcoin, but insists people have to have the confidence and believe in Bitcoin in order for it to function. Peter doesn't trust a digital string of numbers and doesn't think people's confidence in Bitcoin as a digital currency will be long-lasting. Peter believes Bitcoin does not qualify as money at all. He says, money has to be the most marketable commodity and the commodity has to have value unto itself, and Bitcoin has none. Peter claims Bitcoin has never been used as money and is being hoarded as a speculative asset. Peter argues Bitcoin's value only comes from belief and confidence and speculates Bitcoin will go below 10,000. As many doubters proclaim, Peter thinks Bitcoin is a Ponzi scheme. He regurgitates the tired argument that gold has been used for thousands of years and had value long before it was used as money. He believes gold's value comes from all of its combined uses, and 1,000 years from now, humans will still use gold. The big problem with gold is nobody knows how much there truly is on Earth. It cannot be precisely accounted for, as it is held across many institutions, governments, gilded on gates, necklaces, dinnerware, with even more gold being mined every day. The gold backing our current monetary system was abandoned in the 1970s and replaced by a fiat money system with government-printed, trusted paper notes as a proxy for actual gold. Although the gold is audited, there is no absolute way to verify its accuracy. This leaves the questions: who counts the gold? Who assesses its accuracy? And who verifies the assessors? Thus, with gold's ambiguous trust, it doesn't solve all the problems of a sound money. Overall, Peter can't understand the value of a digital string of numbers and makes several jests indicating his lack of Bitcoin's mathematical grasp. Bitcoin is more than a mere string of numbers. It is a digital protocol endorsed by over 1 million nodes, which record and verify every transaction through proof of work. Its strength as a monetary currency lies in its trust, which is not reliant on any government, person, or centralized group, but upheld by the million-plus nodes that check and verify each digital transaction on a public ledger for anyone to view. Like an army of ants supporting a leaf, if one node falls off, another is there, and the protocol continues to be supported by a constant army of decentralized nodes across the earth. Bitcoin is much more than a mere string of numbers. Bitcoin is a mathematically verifiable digital protocol that continuously checks and verifies with precise computation on a blockchain ledger, which can be constantly accounted for by anyone at any given time, anywhere on Earth. Jack makes a case for Bitcoin. Jack believes Bitcoin is the best money in human history. Jack affirms Bitcoin is the most portable, most divisible, most durable, censorship-resistant, scarcest money ever conceived. One of the features that distinguishes Bitcoin from any other currency is that Bitcoin is neutral. Bitcoin's protocol ensures a decentralized power that cannot be assumed by anyone or any central party. Jack poses that Bitcoin was designed to fulfill all the properties that you want in a money, and that nothing else can compete with Bitcoin's unique set of features. Jack believes gold's downfall is due to its reliance on central parties, banks, and governments. Gold was demonetized and requires a central authority in order to function as currency across our current 8 billion global population. In today's global network, it's not possible to have gold function as the currency needed to scale. Jack suggests that gold failed in a global digital economy and that Bitcoin solves this problem. Jack says, with Bitcoin, Satoshi created a scarce bare instrument and a network that can achieve finality in transactional settlement without the reliance on government or a central party. Many naysayers like Peter believe Bitcoin's volatility makes it a speculative asset, whereas Jack believes volatility is baked into Bitcoin's system. In a scarce monetary system, volatility is not a risk, but an opportunity. Bitcoin's finite supply of 21 million ensures its scarcity, which gives Bitcoin its superior strength. Jack asserts scarcity is the base layer of a sound money. With scarcity comes volatility, because shifts in sentiment can cause changes in volume. Unlike fiat currency, where centralized governments counter volatility by printing more money, which in the short term offsets swings in the market, but inevitably leads to inflation and the devaluation of the money. The scarcity of Bitcoin may create more volatility, and in that volatility lies opportunity. But most importantly, the scarcity ensures that Bitcoin's value cannot be inflated or devalued. Money is only valuable as money if it can achieve certain properties, and those properties can change based on resources and technological advances. Jack says Bitcoin is the most performant asset in human history. When you zoom out and look at the data, Bitcoin continuously outperformed gold over and over again every year since Bitcoin's inception in 2008. Bitcoin has an average annual return of about 60%, whereas gold has an inflation-adjusted return annually of about 2% during the same duration. Jack points out that the markets, people, elect the money. That is the best at being money. In today's digital revolution, Bitcoin holds a specific set of features that enable it to be the strongest, scarcest, most valuable money ever created. Bitcoin supersedes gold's features with a unique set of properties that differentiate it from gold or any other previous currency. The world needs a money that can scale globally across a digital landscape. Peter believes Bitcoin is only a string of numbers. Yet in our fast-approaching digital global network, I expect an AI-guided algorithm might think of Bitcoin differently and want to be paid in Bitcoin, the only currency ever created that is backed by encoded, mathematically verifiable, encrypted computations. Saylor and the Digital Gold Rush. Just like the gold rush, the world is discovering digital gold. In the mid-19th century, gold was discovered in California, which led to a massive influx of people from all over the world searching for their pot of gold. Similarly, today, people across the globe are discovering Bitcoin, which is sometimes defined as digital gold. The gold rush attracted people from all corners of the globe, creating a melting pot of cultures and languages, says author Robert Johnson. Last week, Michael Saylor, CEO of MicroStrategy, presented his report, Bitcoin, the Digital Gold Rush, at the H.C. Wainwright Annual Global Investment Conference. In his presentation, Michael described the investor's dilemma, which is not only to make money, but to save your money without losing its value. If you simply put your money into a bank account, it would lose significant value over time due to inflation. The investor seeks to find an asset that not only has value, but retains its value over time and hopefully increases in value. In our current society, few monetary assets outperform monetary inflation. The news and media usually reference the CPI, Consumer Price Index, as a baseline for the consumer's average inflation. But as Michael points out, the CPI is not an accurate measure of inflation. The basket of goods selected that make up the CPI are handpicked through surveys, credit card companies, and government data, but do not reflect the real inflation experienced by the consumer. Michael says a much better measure is the expansion of the money supply, which closely tracks the S&P index. In order to not lose the value of your money, you need to beat the rate of monetary inflation, which is around 13%. There are very few assets that will do better on average than 13%. If you take real estate, for example, the price of your home may increase significantly year over year, but when you take into account the cost of the real estate asset, maintenance, repairs, insurance, the value of the asset is diminished, and over time you may barely break even or actually be losing the value of your money over time. So the question you should be asking yourself is, how do you beat inflation? How do you beat the loss in value of your money over time? Michael equates Bitcoin to digital gold and attests that Bitcoin is the perfect money. Michael describes how many people are aware of Bitcoin, but also many people do not understand it and believe it's too good to be true. In order to understand Bitcoin, you have to examine the ideas that define money and ask yourself, what is money? Where does value come from? And is there better money? Michael believes Satoshi engineered out many of the problems of physical gold, but integrated all the features of a sound money into Bitcoin's digital protocol. Bitcoin is better than gold, and in today's digital global network, Bitcoin may be the best money to store the value of your hard work and avoid the loss of your money over time. Bitcoin's return over the last 4 years is up an average of 47% and easily beats the monetary inflation rate, which in turn allows you to not only retain, but increase the value of your money. Michael highlights a chart by Bitwise Investments that affirms Bitcoin is the top performing asset in 11 out of the last 14 years. Michael continues to present reasons why both the individual, businesses, and institutions need to understand Bitcoin. Michael says Bitcoin has all the benefits of holding something tangible, like gold, without any of the detriments. Bitcoin has no taxes, no maintenance, no tenants, no fees. Bitcoin is a paradigm shift in money and requires one to think about money in new ways. According to Michael, it takes 100 hours of study to go from skeptic to investor. In Michael's presentation, he ventures to accelerate the traditional investor's understanding of Bitcoin's novel digital protocol and inherent value. Those who discover Bitcoin early may in fact be like the early gold prospectors and discover the extraordinary value of Bitcoin before the Bitcoin digital gold rush. Physical gold can be found within what looks like an ordinary rock, and it's not always visible to the naked eye. In order to discover physical gold, one must understand the geological processes that form them and their unique characteristics. Bitcoin may look like an ordinary computer protocol, and to some, a jumble of numbers on a screen. In order to discover Bitcoin's value, one must dust off their layers of doubt and spend some time to understand the mathematical processes that form it. Bitcoin's unique characteristics differentiate the mathematically verifiable digital gold from any other currency ever created. And thus, as Michael Saylor says, it seems, Satoshi engineered out all the bad parts of gold. With inflation on everyone's mind these days, I thought it'd be fun to take a look at some everyday costs in Bitcoin. So let's do some Bitcoin math. A new house is equal to 8 Bitcoin. A down payment on a new house is equal to 1.6 Bitcoin. Your annual mortgage cost is equal to 0.7 Bitcoin. A new car is equal to 0.6 Bitcoin. A ticket to the Taylor Swift concert, 0.05 Bitcoin. A bottle of wine, 0.0008 Bitcoin. All the money we sent to Ukraine so far, 3,917,214 Bitcoin. The money it would take to pay the national debt, 603,448,275 Bitcoin. Once you think in Bitcoin, you just can't help but start measuring everything in Bitcoin. Thanks for listening to my brunch break, where I aim to keep you in the Bitcoin loop. If you enjoyed our brunch break, then grab a cup of coffee with me next time and follow Bitcoin Brunch on X for daily, weekly updates. Rise and shine, everyone, and have a brilliant day. This is Alicia with Bitcoin Brunch, Bitcoin news, education, and commentary, a source for women and busy people. The brunch brief is provided for informational and entertainment purposes only. It's not offered or intended to be used as legal, tax, investment, financial, or other advice.